Hello and welcome, everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It is Wednesday, June 30th, 2021, and I'm pre-recording this Trading Places Live for Thursday, July 1st. Futures are currently, now they're up a little bit as we take a look ahead. Currently, we've got the Dow Jones Industrial Average futures there up 62 points. S&P 500 futures up 9 points, and NASDAQ futures up about 22 points. So looks like we're pointing to an open on Thursday the 1st to open up the second half of the year. But of course, things can change overnight. We'll see what happens in the morning. But at least for now, things do look like we'll get off to a good start tomorrow. Um, let's take a look at the agenda for today. We've got, of course, we'll start off with the daily market recap, then get into talking technically. Want to go through the first half of the year and just talk about the sectors that help lead the market to the upside. We'll go through some of the major indices. Then we'll get into blog highlights, momentum sleepers, earnings spotlight, and we'll wrap up the show with the three you must see. Before we get started, I do want to run everyone over to earningsbeats.com. If you go to earningsbeats.com, you'll see on the left-hand side there is an area where you can subscribe to our free Earnings Beats Digest newsletter. This is a newsletter that's published 3 times a week, Mondays, Wednesdays, and Fridays. There's no credit card required. You can unsubscribe at any time. Simply type in your name, email address, hit that subscribe button. We'll get you set up. We do a lot of free events, and anyone in our community, which includes this free Earnings Beats Digest newsletter, we send out invitations for our free events. So there is a reason besides just getting the newsletter to make sure you're part of our community. Taking a look at the daily market recap and what happened on Wednesday, we did see the Dow Jones Industrial Average climb 210 points after a false breakdown recently. We've come climbing right back up, not only holding that recent support level, but also getting back up above both moving averages. So I do like what's going on here with the Dow. Again, up 210 points. This was the strength in the market on Wednesday. The S&P 500 was up just a little under 6 points, but on a relative basis, you can see not doing nearly as well as the Dow, but nonetheless still setting a new all-time closing high record on that S&P 500. NASDAQ was down. So after last several days, posting a lot of new highs, record highs, the NASDAQ did pull back a little bit, just 24 points though. So just a fractional day of selling, little profit taking. The NASDAQ index did finish right near that 14,500 level. Mid caps rose, but not much, up about 0.1%. Small caps did a little bit better, rising about 1/3 of 1%. Both of those still have some work to do to get through to new all-time highs, though. Energy led the action on Wednesday, gaining about a 1.25%. Nice little move up, trying to get back through the 20-day moving average. Fell just a little bit short on Wednesday. Industrials and consumer staples both up a little more than 0.75%. Staples back above both the 20 and the 50-day moving average. Industrials testing those support level, or excuse me, those moving averages. And real estate was the laggard on Wednesday, dropping a little more than 0.75% and actually closing for the first time in a while beneath the 20-day EMA. It was just a few pennies beneath, but still that is showing some weakness that we haven't seen for a while. Bank stocks, when you look at it, you think, okay, well, 10-year treasury yield was lower on Wednesday, so maybe the banks would sell off, but instead we saw some strength. That's the good news. The bad news is we were still unable to get through the 20-day moving average. So if the yields don't rebound, I would be a little careful with the banks in the near term. We need to get back through that 20-day. All right, moving on to the 10-year treasury yield. Just wanted to go through the economic reports that'll be out on Thursday. Initial jobless claims expected to come in at 395,000. Last week, 411,000. So we are looking for those to drop a bit. June PMI manufacturing, 62.6. May was 62.1. So we're looking for a little pickup there. June ISM manufacturing, 61 is the estimate. May was 61.2, so a slight decrease there. And then finally, May construction spending, looking for a rise there of about 0.5%. April rose 0.2%. So we're looking for a little bit further pickup there. The 10-year Treasury yield, though, you can see did pull back almost 4 basis points on Wednesday. So despite that pullback, we saw banks moving up, but couldn't get through the 20-day moving average. I would be very surprised to see banks break out above their 20-day unless they get some cooperation from yields moving higher. So far, we're not seeing that. All right, moving on to talking technically. So here is the 6-month returns that we've seen on each of the sectors throughout the first half of 2021. Energy was the big winner, up 44%. You got to take everything in perspective, though. Keep it in perspective. Energy was, you know, it was underperforming the S&P 500 for about 8 or 9 years. So yes, it had a very strong first 6 months. We had the dollar, which had shown weakness throughout most of the year, and that combination, I think, allowed energy to outperform. I don't know that that will continue in the second half. I'd be very surprised. I think energy could have a little bit more room to the upside, but I don't know that it has a whole lot. I'd be very careful in the second half. Financials also performed well, and a lot of that was because of the big move up during the first half of the year in the 10-year Treasury yield. We've seen more consolidation of late. I think we could move higher in the second half, which could lead to some gains in financials. I just don't think we're going to go shooting higher like we did in the first half. So you might want to be a little bit more careful there. Technology, which we normally look for in terms of leadership during secular bull market advances, technology only up 14% in the first 6 months, which wasn't much considering what the overall market did. I'd be looking for more strength in technology in the second half of the year. Same goes for consumer discretionary, which gained 11% the first half of the year. I think we'll see some more strength there. Dow Jones Industrial Average, as I mentioned, back up above those moving averages. That was pretty important to get back through those moving averages. You can see the PPO trying to get back up. And actually on Wednesday, the PPO did close just back into positive territory. So after being negative for the last, 2 weeks or so, we did turn positive again. That is good, starting to show a little bit more bullish momentum. We want to see that continue. A breakout above 35,000 would really be bullish for the Dow Jones, especially after that false breakdown just a little over a week ago. All right, S&P 500. We did close 4297.50. We got as high as 4302.43. Another all-time high intraday and on the close. I think the S&P 500 continues to look strong. We are in this period where we tend to see strength historically as we move toward earnings season. I think we're probably going to continue to see this move higher, and I wouldn't be surprised to see a push toward 4,400 here over the course of the next couple weeks. The NASDAQ, and this is the one that just recently broke out, and I'm looking for more strength in the NASDAQ index as we move forward. And the reason being, we had a very lengthy consolidation period here, equal highs, rising lows, ascending triangle. We just made the breakout. We could pull back and test that rising 20-day at any point, but I do think the longer term, and maybe more intermediate term, I guess I should say, I think over the next few months, even though it is in the summertime where historically things can be a little bit more challenging, I believe based on this pattern, the NASDAQ is going higher. I think we'll probably be looking at north of 15,000 by the time earnings season kicks in, and wouldn't be surprised by the end of summer if we make this measurement up to 16,000. And again, that's during what typically can be a challenging period throughout the summer, but it just, again, technically looks much more bullish. We'll see whether or not we can make those targets. All right, I want to move on to blog highlights. So if you're not familiar with it, I do have a Trading Places blog at StockCharts. And if you're at StockCharts, if you go over here and click on articles, and then under this drop-down menu, you can go to Trading Places with Tom Bowley. And right here is the most recent article that I just wrote. This was earlier today. talking about a stock that, in my opinion, is really printing a textbook bottoming head and shoulders pattern. It's Butterfly Network. Just wanted to point out not so much what's in these articles, but just the availability of this blog. And if you go to any of my blog articles and you go down to the bottom after I sign off here, there is an area where you can subscribe. This is a completely free subscription. The key is that once I publish an article, and I don't publish regularly, it's maybe once or twice a week, and it could be any day, any time of the day. The key here is once you put your email address in here and hit that subscribe button, as soon as my article is published, it will be sent to your email. So you never miss an article. This one was more of a specific trading candidate. So if you like that sort of thing, then you might want to make sure you subscribe and get this information as quickly as possible. But this was one article, like I said, I just wrote. Recently, every once in a while, I'll put a daily market report, which is what I send out to our members every day that the stock market is open. Every once in a while, I'll just give a sample in my blog. And that's what I did here, talking about Jinko Solar. I don't know if you saw Jinko Solar, but if I scroll down here and pull up the chart, um, actually, this is the more recent article. Not sure how that happened, but anyway, I think there was an earlier article. There may have been some kind of a mix-up here. But Jinko Solar, let me pull up the chart and show you what happened, because Jinko Solar was a stock that I had mentioned in our daily market report prior to earnings. And if you look at this, this was when earnings came out. Look at what Jinko Solar has done. Now, it wasn't that long ago, back in September of last year, this stock ran from under $20 to $90 in about 5 weeks. Now, I don't know if that's what's happening here, but this is a stock that can move very quickly. And I had just mentioned that it was coming out with earnings, and we were starting to see a lot more love being shown, the renewable energy space. And Jinko actually came out and beat expectations. And look at this move to the upside. Stock has run from about $37, $38 up to about $56 just in the past 3 or 4 trading sessions. So definitely good to keep an eye on this blog. And then finally, here was another article that I'd written a couple weeks ago regarding options expiration and the fact that NVIDIA, we wanted to be careful going into options expiration. Now, NVIDIA at the time was 720 and now trades for 800. So you might think, well, that probably wasn't a very good warning. But if you pull the chart up, and I had mentioned in the article, you're really only looking at the next couple of days and a directional move to the downside. If we pull up this inspect button here and you look back on July, I think it was June 15th is when I wrote the article. So the 14th, it had closed at 720. The 15th, it moved down to 709. The next day, it got down as low as 703. So it did start to make that directional move into option expiration before it then rallied at the end of the week and then continuing here over the past couple of weeks. So this is definitely one of the best performing stocks in the semiconductor area. But I still think it was a pretty good call to at least be on the lookout for a short-term pullback, because the stock, when we put it out, was 720. And like I said, less than 48 hours later, it was down to 703. So that's, from a trading perspective, that's good information to have. And even though I would say this didn't work out great, it did at least make that directional move at the very initial stages of option expiration. All right, let's move on to momentum sleepers. So what I wanted to do here is I wanted to show you first railroads. So railroads typically do very well during a period of economic expansion. And railroads were doing very well through the second week of May. And then we topped and we've been pulling back. And I think this is kind of the definition of momentum sleeper. Very strong area of the market, gets to a point, and then it just simply consolidates for a while. Everybody forgets about it because the group's not doing very well. We were up near 3,500, and now today's low is down near 3,200. So we're talking about close to a 10% drop in the railroad index. So a lot of the individual stocks within railroads not doing very well. So this is one area I wanted to take a look at. I also wanted to pull up the gambling stocks. Because if you look at the gambling stocks, we had the group's been moving higher overall, but over the course of the last 3 months, it's been trending lower. And so this is where, if you pull up the annotations, it's looking to me like a symmetrical triangle. And a symmetrical triangle is a triangle in which the highs keep getting lower and the lows keep getting higher. And so what you end up seeing is this squeezing. Now, when we break, I think it's really important to see which way we break. But if we can get this back up over 900, especially over 925, the index, I think that would be very bullish and would begin to look or begin to point to the gambling index going back to test this March high, which is all the way up close to 1075. So that's a lot of movement to the upside. So we want to look at some of the stocks within this space. We're going to do that in just a minute. And then finally, the other area I wanted to point out was the healthcare providers. So that's the DJUSHP. And this is one that had been downtrending, but notice just came back up on good volume, got through the 20, tried to get through the 50, and it's just holding right around this 20-day moving average. Another breakout here to the upside, move through about 2880 would be bullish on the healthcare providers index. That would take us through both that 20 and the 50-day. We're above the 20 right now, or right about on it. Actually, we're just slightly below it. But move back up to 2880 would get above both the 20 and the 50. And I think then we would probably be looking at maybe an inverse head and shoulder pattern where you got the left side coming down here, left shoulder. Then we got the left side of the neckline, then the head. Break above 2880, I think, would point to a 2950 test. Then maybe one more shallow pullback and a breakout. That's something I would be looking for. I like to try to spot these potential continuation patterns because, in my opinion, we are in a secular bull market. I believe prices go higher. So after a group leads for a period of time and begins to consolidate, I start looking for patterns that would fit into, continuation type moves. And so that's what I see here with the healthcare providers group. So what stocks within these groups should we be thinking about? Well, within the railroads, first one I pulled up was CSX. They just had a 3-for-1 stock split. Stock was up 96 or whatever. Now it's back to 32 because of the split. Of course, you get, your share price is 1/3 of what it used to be, but you now have 3 times as many shares. So there's really no effect, except that it now becomes more easily purchased by individual investors. $32, obviously a lot cheaper than 96. But this is a stock that had a double top false breakout back on May the 10th. We've been downtrending for a while, but notice the breakout came right about the 32 or just below $32. And then when we broke out to about 32.5, we pulled back to about 31.75 or so. Notice where we are now. We got down to about 31.50, but currently we're at 32.08. This is an area where we could see CSX break back to the upside, and I do expect railroads to do well later this year. So I like CSX. Don't own it at this point, waiting more for confirmation on a move to the upside, but I do think it goes higher. Union Pacific, very similar type pattern. You can see the recent low here in April came down to 215. That's right where we closed just about 2 weeks ago. And now we're trying to move back up. I'm just seeing sideways consolidation. So this is another railroad that I think is a momentum sleeper, just waiting to maybe start another move to the upside. The last one in the railroads I want to point out, Canadian Pacific Railway. Look at the recent low in May. We pulled back down to about 75.5. And then again in June, came right back to this level and so far holding it. Haven't gotten back through the moving averages, so you want to be careful here. If we fail at the moving averages and move to new lows, then I think that brings in the lows all the way down around 70. But if we can continue to hold 75.5 or so, then we could have the worst behind us. Moving on to some of the gambling stocks. First one I want to pull up is Caesars Entertainment. After breaking out to a new high earlier in June, we got up to about 115, 114, 115. We just pulled back just 2 or 3 weeks later under 100. So that was a nice little pullback into a group that's been hot. This is one of the better performing stocks within the gambling area. So if we pull up a relative chart, You can see here, Caesars was just at a 52-week high relative to its gambling peers just a couple weeks ago. So this sideways consolidation has seen the relative strength pull back a little bit, but I think that could be creating an opportunity. I think we have a good chance to rebound here on CZR. MGM, this is one I featured in an article I wrote not too long ago about pre-earnings advances. I think MGM is one that you might want to keep an eye on as it starts working toward earnings season. We did go down the 20-day. We had that false breakout, but I wouldn't be surprised to make another run back for a breakout. Close over 45 would be bullish here. DraftKings, this one is a little bit more aggressive, but the stock, after getting up to $75 just a few months ago, went all the way down to 40 and then started to recover. And what I really liked was this heavy volume hollow candle. I think that is a sign of some pretty nice accumulation. And you can see that jump in the AD line, accumulation distribution line. But the last 6 weeks or so, we have been moving straight up in accumulation, even though price action doesn't look that good. And that tells me we're probably getting some accumulation in this stock. A move back through about 56 would be very bullish. One last thing I'll bring up on DraftKings. If we go to a weekly chart, you can see that the stock had gone from $10 to 75 in literally a year, maybe just a little over a year. So it needed some time to consolidate for a while. No problem there. We went back a little below the 50, trying to get back up now through the 20-week EMA. That's sitting at 52. So any kind of a close on a weekly basis above 52 would really start to look good, or actually 53, 53.12. So currently we're at 52.17. A little bit more work to do to the upside, but watch that because that could be a signal here with DraftKings. Next up is Wynn Resorts, WYNN. I'll pull this up on a relative basis. It's been going sideways here for a while, but it's got really good support around 120, which it just tested. And the highs in this range are up near 140 to 145. So as you get closer to 120, I just think the reward to risk looks pretty good. You can see Wynn relative to gambling stocks in May set a new 52-week high. So this is a pretty good stock within this group. And if the group starts to take off, just keep this one in mind. Let's see. The last, let me go back here. Just a couple more here in the gambling area. Boyd Gaming. So you can see Boyd Gaming, after making a push up here in April above $70, it's been consolidating. I think you can see the highs are declining, lows are slightly rising. 57, 58, I think is really good support on Boyd. But this is one that I expect will lead again when this area begins to strengthen. Another one, this is a small cap stock, Full House Resorts. After setting a high at $12 at the end of May, we're now trading at $9.94. So that's a pretty good drop, almost 20% off to the downside. And we were at 20% at the recent lows. So I wouldn't be surprised to see this make another run toward $11.50, $12, which would be a nice percentage gain from the current level. Last stock is CNTY. This is Century Casinos. AD line's been incredibly strong, just recently pulled back a little bit. This is another stock was up near 16, just recently back in the 12s, currently trading at 13.43. I would probably wait until it can get back through the 20-day, but if it gets through that 20-day, I think we could see another quick move back up to 16. What I'm expecting is off of this uptrend, I think we're going to see a cup. So I think we're going to head back toward that 16 level. All right, healthcare providers. Let's take a look at HCA. This is HCA Healthcare. After moving up, putting in a double top, you can see a lot of consolidation. Definitely a momentum sleeper here. It was one of the best stocks looking at the healthcare providers group. You can see it's still near a 52-week relative high. So it's just this consolidation, but I do think we're going to make another run back up toward that 220 level and eventually break out. So I do like HCA. A couple of others in this space, AGL, Agilon Health. I like the reversal off that 20-day, and notice the breakout recently above about 38.5. We went all the way up to 45, came back to this 38.5 level. This is an area where I think this pullback could end. Watch that rising 20-day. Don't want to see a close below it, but I think this is one that could short term make a move back to the upside. ALHC, which is Alignment Healthcare, equal highs. And now you got these recent lows where we've seen some support coming in right around 23. And after four, well, really six, but four pretty lengthy filled red candles, you can see we actually kind of reversed that on Wednesday. So watch 23. If we lose 23, we'd go back down to 20. But I think we could hold 23 and start making a run back up toward that 27, 27 and a half area. A couple others real quick. FLGT, this is Fulgent. I like the stock. It's broken back up above its 20-day. The 20 is now crossed back up above the 50. Volume's been coming in. Just kind of has that feel like it's starting to turn back up and trend higher. BKD, which is Brookdale Senior Living. You can see the big move up here with heavy volume, the gap up. That came at, well, the open that day was at 776, and we just got back down to 790. We were up at 9 not that long ago. I think 776 would be a good support area. I'd be looking for a reversal there. All right, let's move on to earnings spotlight. Just wanted to bring up Micron. So Micron reported after the bell, and I'm going to give you the, see if I can give you an after hours quote here on Micron. I know it was down after hours. Yeah, down about 2.25%, $1.93, 83.05, which is still above the 20-day. That's what I'm going to be watching closely. They came out, they reported their earnings. The bottom line was $1.88. Market was expecting $1.71, so not bad there. But we are down a little bit. 85 is a key resistance level. I would watch the rising 20-day, which is now down at 81.36. I think that's your trading range. So if we pull back tomorrow with earnings, test that 20-day moving average, that could be an entry point. Micron is not one of my favorite semiconductors, but it does look like it's beginning to strengthen, and that's why I think that 20-day could hold. SJR reported their earnings. They were expected to post 28 cents. They actually posted 56 cents. After hours, SJR, just to let you know, up about 2.5% to 29.66. So it is back. Looks like it's going to be back above both its 20-day and 50-day moving averages. Maybe poised to go up and challenge those recent highs just over $30. All right, let's move on to the three you must see to wrap up. We're going to start off with Tapestry TPR. This is a, we're going to go through these pretty quick, but Tapestry looks to me like it's trying to get back up through its 20-day. Volume has been coming in lately. It's been consolidating for a while. AD line remains strong. This is one I think's got a shot to make another run toward $50. Wendy's had a huge move up, came all the way back down, filled this gap, and put in a reversing candle on Wednesday. So this one is one that may be just starting to get going again. Keep that one in mind. And then finally, AVAV, which is in the defense area. You can see the stock, rough day, down almost 9%, but key gap support just above 95, maybe around 96. Price support around 100, and that's where we went and tested. Let's see if the low from Wednesday holds, but I do think AVAV looks pretty good here. All right, I want to thank everybody for tuning in. I'll be back next week on Tuesday for your next Trading Places Live episode right here at StockCharts TV. Everybody enjoy your Thursday, enjoy your long holiday weekend. Happy 4th of July, and see you next week. Happy trading.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.